Thanks for having me here. The weather is very kind. When I left Hong Kong, it's 4 degrees centigrade. And I arrived here, found that temperature is 3 times warmer. Talking about Asia, emerging Asia, living in Hong Kong, we always have a mistake. We think the emerging market means emerging Asia. And then we talk about emerging Asia, we always think that it's China. So I can make some differences here. What I try to highlight is a few points. One is that where the risk lies. To be honest, if you talk about 2011, probably not much. Again, I want to warn you that there's some degree of Asia bias here. I myself gone through 3 crises in my career. I joined Merrill Lynch in 1987, the stock crisis in New York. I left Merrill Lynch in 1998, right into the Asian financial crisis. And 5 years ago, when I joined Standard Chartered from the central bank, the Hong Kong Monetary Authority, people asked me, are you sure you won't see another crisis? I told them that I'm quite sure that I won't see another crisis as big as before. It turned out it's both true and wrong. Wrong in the sense that this latest crisis is much bigger than Asian financial crisis. But it's true is that the impact on us is much less. And if the impact on me is much less, at least I don't need to change job. Hope I know how to play with it. Yep. Some good news about Asia. During the crisis, half of the Asian or so-called emerging Asia countries has actually ran into recession. Some are pretty severe, more than what we have seen in the Asian crisis. But within a year or so, all of them managed to get back. And 5 economies, in particular China, India, Indonesia, and to your surprise, Philippines, and even Vietnam, didn't suffer any recession at all. A year into the crisis, the GDP level is still higher than before the crisis. And 2 years after, they're much higher. That probably makes a difference with what we see in terms of Asia. So most people's question now is this kind of so-called resilient performance sustainable? After this morning's talk about the US, I think I'm more confident it is sustainable. Sustainable in the sense that Asia, to a large extent, depends on export. And in old days, we export to US and Europe, and to some extent, Japan. If US were to grow by 3% plus, Europe probably not too far off, then we should have another good year. Looking at where the growth have come from during the last year or so, one part of those are coming from export. To be honest, I don't really that comfortable about those who depend so much on export, even though the export prospects should be better. I explain to it later. We have 2 countries which are relatively strong in export growth during last year. Singapore, where export at almost 10 percentage point to its growth. But most of the others, actually the growth is coming from domestic demand, either investment or consumption. And this on domestic demand is not just for driving their own growth, but also driving the export growth of the region. If you look at where are those exporters exporting to, most of those are actually exporting to themselves in the region. Asia, from Korea, China, all the way down to Southeast Asia, absorbed easily 30 to 80% of Asia's export growth last year. So the question is, to what extent Asia or emerging Asia can be their own final market going forward? That is my biggest question mark. I hope we are, but probably not in the near future. Out of the crisis, there's a lot of stimulus, fiscal, monetary, and trade. And that helps to rank up some of the domestic demand or the regional demand, which turn around into some sort of export demand for the others in the region. Like America, like Europe, our stimulus is fading. either willingly or unwillingly. So this kind of temporary stimulus is going to fade. But in the longer run, for those who believe in emerging market taking a bigger and bigger role, I think we are right to expect Asia's export will get more and more into the region. The bigger concern actually is not so much of whether we can sustain growth, but the problem now is that we have too much growth. And come with it is the problem of inflation. Inflation, there's two aspects of inflation in Asia. One is general price inflation, what we call CPI inflation, consumer price inflation. The other part is asset inflation. There's another interesting concept we have to bear in mind. What in America or here we call as core inflation, which means that you take away food and fuel or energy, because those elements are relatively volatile. What is core here actually is non-core in Asia. The reason is simple. If you look at this chart, food and energy account for 30 to 60% of Asia's consumption basket. So what is non-core here is actually core in Asia. And that's why we have more worry this round, because our inflation is coming from higher food prices. The only comfort we can get in two aspects. One is that the current inflation level is only about half of what we have seen back in 2008. Second, the kind of food inflation are hitting us less than the kind of food inflation that hit us back in 2008. Asians consume a lot of rice and wheat. These are stable food. Fortunately enough, if our own forecast is right, and many of our commodity analysts is agreed to, is this round of the food price pressure is not coming from the stable food, grain or wheat or rice, but more from the cash crops. For those who travel to China often enough, one warning you have to be careful these days is that don't walk on the grass between rows. In the old days, they grow grass, they grow flower. These days, they grow vegetable. Farmers find it so profitable, they take every single pot that's cultivatable to grow vegetable. But the good thing is about this kind of food price pressure is these cash crops are of relatively short production cycles, probably a few weeks, maybe 1 or 2 months. So provided the policy response is right, which we seem to be seeing coming through, then probably take 1 or 2 quarters time, the supply side response should help to curb consumer price or food price inflation. What we worry more is actually asset price inflation. As indicated just now, the biggest worry for us is too much money. There's another misperception here. Much of the money we have in Asia or emerging markets is coming from outside, capital inflow. Even though it may be right, we haven't seen much yet. Much of the excess liquidity is coming from the region itself because of the emergency, unconventional easing we have done. Now we are going through another interesting phase of development. In US here, and to some extent in Japan, we have unconventional monetary easing, quantitative easing. In Asia, we have unconventional monetary tightening. Central banks come up with all kinds of interesting tools, trying to tighten up their own monetary flow, as well as try to stop money flowing from outside. This is a much bigger task to deal with, and I will expect this year, if anything, this is the major risk. Higher interest rate, strange actions from the central bank, either by talking or doing, and particularly in bringing the foreigners by imposing some sort of capital control. The last thing I want to touch on is much longer term, but it may hit the news more often, is the Chinese effort to make the currency a reserve currency. It may not have direct impact on you, even though those who are trading with China, occasionally you may hear either your bankers, probably from Standard Chartered, or some others, to tell you that you may consider using the Chinese currency to settle your trade. My guess is that quite unlikely people here will do it. Quite unlikely people in the developed countries will do it. Because why go for an inconvertible currency rather than a convertible currency, like the dollar and the euro? But in the emerging market or in the developing countries, there are more and more interest about using that. The Chinese is pushing the currency to settle trade and going further to use the currency for investment inward or outward. What is significant here is that from this crisis, we see some structural break of the global economy. On one side is the emerging market, probably led by some major emerging countries like China, India, Brazil, who will take a bigger and bigger role in the world economy, both in trade and investment. And another aspect is the financial sector. We'll see probably more and more different kind of currency, and probably here Chinese is taking a lead to play a bigger role in the international monetary system. I'll stop here, and I understand there's a lot of questions to be followed, and many more experts to talk about different regions. Thank you very much.